Well, it's no longer news that Nigeria's central bank has raised rates and narrowed the corridor for lending, as well as tightened the news around the rates the bank pay commercial banks for parking their money in the vault of the financial regulator, leaving liquidity rate unchanged, keeping his eyes on the future. But the question is, this is the morning after March the 23rd, after the MPC decisions. Let's cross over and get a sense of how the market's moving on from yesterday's announcement. Wale Olusi, investment research analyst from AfroInvest. Wale, thank you very much for coming. You're looking really bright for a Wednesday.
Good morning, boss. It's nice to have you.
Yes, thank you. So after the 2:30 p.m. yesterday's announcement, you folks at AfroInvest, I'm sure you took some hours after that crunching the numbers. What did you come up with? Talk to us.
Wow. Okay. First of all, we a little surprised about the decision of the MPC, most especially raising interest rates, despite the fact that some of the reasons that led to the jump in inflation that we saw in February was broadly driven by cost push factors. Yes, earlier we expected that NPR will be increased later on somehow this year, but for us, we think it's kind of coming early, more given the fact that MPC didn't really, touch a more pressing issue to foreign investors because, they increased NPR trying to, compensate foreign investors because our real return is more or less negative at the moment. So we do not think that's enough to, drive in the foreign portfolio inflow that we are targeting doing that. More so is the fact that we also increased TRR from our estimation that should take out about 100 billion naira out of the system. But they are also saying that speculative activities on FX due to the size of the liquidity in the system account for some of the reason for that. But in our end, we think that might be, that might be telling, given the fact that in November, when that move was made to reduce TRR from 25 to 20%, we were wondering why they would do that because the risk environment is still very, very unattractive for banks to give out loans. So we are a bit surprised when we saw that move. Most of the part of the consensus expectation for the MPC was to hold most of these rates at the moment. But we think they will hold on to the tighten in the interim.
Well, so Wale, among all the asset classes, which one will benefit the more from these rate hikes? It has to be a window somehow for at least one or two of the asset classes.
Yeah, definitely. Fixed income instrument should, increase yields in the fixed income environment should increase about 100 to 2 basis points as a result of this 100 basis point, hike in NPR. For money market trade, we think interbank rates should, adjust slightly because liquidity in the system will also be affected. But for the equities market, we think investors will still be more concerned about, earning abilities of the corporate companies that are listed on the floor of the Nigerian exchange. Foreign investors still want to have a clear outlook as to what CBN wants to do about foreign exchange and the currency market environment. Until some of these issues are clarified, we may not see a significant, reaction from the equities market. What happened yesterday remained very marginal gains as broadly driven by some earnings releases in the market and some bargain hunting. So broadly, we think for the plus, the fixed income market may benefit from the increase in NPR.
So what's the thinking among the analyst community on the FX policy situation, which the Emefiele CBN yesterday tried to sidestep and went for the banking for Broad Street to tighten rates a little bit more, tighten liquidity, and just kept a little bit silent on the FX market?
Yeah, I mean, we were kind of surprised because after all the, response, they kind of sidelined a more critical issue to the investing community, which is FX. They left the issue unaddressed. Rather, the CBN governor said they will continue to look at what they will do and they will get back to the market in due time as to what they can look at. So, I mean, the challenge still remains. Investors are still very much uncertain about what is going to happen to rate. A more pressing issue is the fact that even if you devalue at the moment, we don't think is enough to, fix the mess in the system, because it's looking like the monetary policy itself is reached the limit of its effectiveness as far as this is concerned. Perhaps that's why the MPC also noted the fact that the budget should be passed so we can see enough spending from the fiscal space. And I think this morning we saw a news flow that is suggesting the fact that the Ministry of Finance is considering about 350 billion naira, stimulus. We need a lot of that, because I think there's a little that the monetary policy can really do at the moment to fix some of the structural weakness that we're experiencing in the system.
So, Wale, do you think that this huge fiscal spending within the next quarter can help or will help Nigeria escape the devaluation trapdoor?
Well, fiscal spending, it might not be enough in the interim to help Nigerians escape the quagmire we are facing with the FX challenges. But it will take a while, maybe medium to long term, but not in the short run, because even if you devalue, it won't solve it. The market is already pricing a lot of uncertainty, policy volatilities. But with spending, this will cushion the effect of consumer spending. Corporates can, for example, if we spend enough on capital spending, the industrial goods sector can get some more funding that can filter into consumer spending, which will affect the consumer, space, and of course, the banking sector can even get more deposits as a result. And once the system begins to stabilize, we can see more expansion of loan from the banks, and that comes back into the system in form of investment. But this will take a while. We don't think this will happen in the interim, maybe in the medium to long term. Yes, but really, the government needs to spend at the moment.
Yes, the government needs to spend, and that is reflating the economic balloon and let it go, and it flies up, so it makes everyone look good. But once you devalue 6 trillion naira budget, $30 billion, that's what it means. So 6 trillion naira and $30 billion, if you go by some conversion, that is putting a pin in that balloon, and it may start coming downwards.
Well, that is inevitable if you devalue, funny enough.
So this administration is not likely to do it, at least not in 2016.
Well, if you want to go by all the comments from the presidency and the fact that CBN has continuously sidelined that issue, we don't think government is seeing enough justification to devalue at the moment. And if we will not do that, then we must stabilize the market. We must show foreign investors that things are going to be good, so that we can get some capital inflow. Because the current problem we are having is more about dollar supply. We do not have enough supply to do as much as we want to do, and it's halting the private sector, it's halting the the industrial sector. The manufacturers are really complaining. Except there's something that we can do, compensate for the shortfall we have from oil that constituted about 90% of our exports. In terms of inflow of dollar, it will remain a challenge. So except we look for ways to solve that problem, and that will require a lot of clarity on the part of foreign investors who want to come in with their dollars, because they have calculations that they don't want to be altered once they come in and now devalue. Except there's enough clarity, that will not happen.
Wale Olusi, we thank you very much for that robust conversation and insight into how the markets and the economy work together in the new interest rate regime we just entered into. Wale Olusi, research analyst at Afrinvest, one of Nigeria's investment and securities trading firm.